All right, this is going to be FOMC. You're going to see a mitigation on a loss. So this is GBP, and I'm going long at a re-entry on optimal trade entry, and I'll explain what that is after the video is done. This portion, this is recorded price action. So I'm anticipating a run on yesterday's high, noted with previous day's high at the top. And you can see that today's intraday high is just slightly lower than yesterday's high. And I always look at that as equal highs. And retail traders or less informed traders will view that as a double top. And usually there's going to be buy stops resting just above that. And I gave you yesterday also my next upside objective for GBP USD or cable. And I'm certain if I was to do a poll and ask everyone if they forgot about that, they'd probably say yes. Okay. I've taught you in the very short time that we've been together, there is a side of the marketplace that the market maker is going to work predominantly, and we're working on the long side. So that means previous day's highs are going to be targeted. So it's going to be a run on those liquidity runs. And we have price bouncing away from the high of 2 days ago, which is that light blue line that's indicated where it says previous day's high 2 days ago. And I'm going to be looking for price to start climbing above the most recent short-term high, and price is now starting to expand. I just moved my stop loss to a point of no loss. It's above my entry point. So now I have an opportunity to sit in this trade and hopefully manage it to the point where it takes out previous day's high and allows me an exit point there. So what I'm trying to do is I'm entering during the time when the market looks like it's breaking down. Okay, when the market was dropping today, look at all the dark candles, the black candles, they're all down closed candles. So that's showing the willingness for the market to want to go lower, and they're doing it quickly. Okay, so it's doing that under the guise of reaching for sell stops, trapping traders on the downside, okay, or engineering the mindset or sentiment of retail traders or less informed traders, to say it that way. And you can see we're fastly approaching the FOMC. Okay, we're about 4 minutes away. You can see how fast this recording has been sped up. So I'm going to be looking for the opportunity to have this market move push me up through previous day's high and hopefully up into my limit order. And now it does that and blows through its equal highs. You can see how price does it on a spike. It does it real quick. It's snappy punch right through previous day's high, and now it's pulled back. Now, truth be told, I was trying to get out above those equal highs, take something off there, and then let my limit order trip. But I wasn't fast enough to do that because I was back and forth between several screens. And the long and short of it is I just didn't get it to get off there. So now I'm scaling the stop loss tighter, and I'm watching that spike that we created on FOMC, and I know that we're probably going to want to run above that. Okay, and a portion's already been removed on this trade, so, and you'll see that in your trade ledger where I add all the entry points and exit points at the end of this recording of price action. So now we're above previous day's high, and now we have this squared off price action where we have a high, we're bumping up against a high, and price never leaves that intact. It always wants to run through that, put traders on the wrong side, or knock those individuals out that want to be short. Remember that long-wicked doji that was created at FOMC. Steve Nielsen followers like to see that and think that's a bearish pattern, so they'll sell short. That's their trading pattern, one candle. And that's not something I would advise you to do. I actually capitalize a lot on my analysis when I see things like that. Understanding what the weaker-minded traders are thinking many times is an advantageous thing when we're doing analysis. And one of the wonderful things about being a trader with 24 plus years experience, I had a lot of time being a novice. So I know what I was thinking then, and that's how I interpret price a lot now. Okay, so I'm going to be taking something off here again, and now move my limit to get out. Notice what I did? I reduced the risk with my stop, never opening it up with more, but I opened up my profit potential when I got very close to where I wanted to get out. But it's so late in the day, I just don't want to be messing around with it. So now I'm going to show you my entry points. There's my loss earlier in the day, and I'll actually take you into the charts after this portion's done and show you what I was looking at and why it was wrong. And there it is. There's the loss. You can see that here. Entered here on optimal trade entry and stop me out. And then you can see the re-entry at optimal trade entry. So I'm using the same entry pattern. Got a better fill than I did on the initial entry. And here's my exit points. So let me take you over to the charts. Okay, folks, I'll take you in here a little closer and show you what I was doing today. Originally, my initial entry, I was using this price swing here, okay, right in here, and I wanted to get long as price dropped down into optimal trade entry. I wanted to get long that way, so that was my entry point, and my stop loss was a little, a little tight in the sense that on better setups, it would have never been hit, okay, but because I felt that we hit this high of 2 days ago, we hit it 1 time, 2 times, 3 times. I didn't think we'd see it again, but they ran it one more time and then stopped me out. So it is what it is. You can see the stop is right here. So after the run through, I said, okay, I'm going back in. Now look what's happened. I got the same price structure here in mind, and I'm entering right at optimal trade entry again between the 62 and 79 cent tracing level. Now you're probably thinking, wait a minute, Michael, this is a break in that pattern, isn't it? Yes, but it has not changed my analysis. I still believe that we're going above previous day's high. So I entered there, and price gave me an opportunity to exit here during the FOMC announcement. Then I exited up here, and I have another one in here. I don't know. I thought I did. Yeah, I think I did. And I think it's overlapping. It's so close to one another. That's what it is. But again, as I did yesterday with you folks, I exited very close to the high. Okay. And I exited very close to the high again. You can see the really nice price action pulling away from that. So I made the right decision. In my opinion, I think I made the right decision by collapsing the entire portion of the trade. So my loss down here that I took in this trade was completely mitigated, almost with the first scaling out, and certainly with the last 2 portions. So it allowed me to go to a new equity high. So that's that. I gave you also a opportunity to know in advance where the banks were going to take the cable today. The upside objective was going to be, okay, in case you haven't checked it out yet, this is my Twitter account. So you guys are absolutely welcome to follow me on Twitter at I_am_ICT. Okay. And I'll show you what I tweeted yesterday. It's about 20 hours ago. Right here. You click on that. You can see this was the next objective for the cable. So 132.42 is what I was looking for. So with that in mind, I always want to exit before my target. So if I'm calling this as an objective, I want to be exiting before that. Okay, it's much higher probability, I should say it that way, to exit before a known target in your trading plan than it is to just be greedy and know that this is the best case scenario and this is perfection and to demand perfection. That's always going to be problematic. At least it's been problematic for me as a trader for over 2 decades. So I try not to be demanding. And then when you see the high on today, comes in at 132.37, and my exit point were 132.35 was the high end, 132.34, and you can see price has done a really nice movement away from that after they've unloaded like I had done today. There's been some selling, okay, and you can see that's evident here. So again, during the New York kill zone, entry and then exiting as the banks would do. Hopefully you found this insightful. Until next time, wish good luck and good